enough, and then it's to know if network is not playing any pranks on me at this point. So thank you very much. So today we are going to be sharing knowledge on personal income tax, administration, and everything in between. And like I always say, I'm in the midst of my professional colleagues, so I'm not teaching. We're not teaching. I'm not telling us what is new. We're not going to be talking about how to prepare personal income tax per se. We're not going to be going into all the preparation and all. We're just going to go through. We're going to summarize to probably bring us into remembrance of some of these things perchance we had forgotten, and then the practical aspects of what is going on in practice, the real deal. Okay, so I'll be sharing my screen now. Please confirm if you can see my screen, please.
Yes, we can.
Okay, thank you very much. Personal income tax management presented by me. Okay, so the content of today's discourse is here, learning objective, what we're going to, what the objective that is set out for this small training, and introduction, and how to determine residence, because PAYE is all about the individual, unlike company. So, and then partnership assessments, and then there are some fundamental concepts, and then administration of personal income tax in Nigeria, and the summary, and also the practical. We're going to go on to some of these portals. I like what is happening in Nigeria now. Everything is going electronic and it's awesome. Removing that human interference, that human interface that sometimes impede um good work to be done, if there's a word like that. So we'll be, assessing the LIRS, if time permits, the Ogun State Inland Revenue Service and the Oyo State Inland Revenue Service. I picked those three because I'm familiar with those. So, and then the learning objective. At the end of this session, we view this initiative as an additional income channel and also have a full understanding of personal income tax administration in Nigeria, and will be equipped on the process of registering an individual or body corporate for tax purposes with the relevant tax authority. And like I said earlier, we just like a form of, hold on please, like a form of recap on to bring us into remembrance of what we all know. Personal income tax in Nigeria is a tax that is imposed on the gain or profit from any trade, business, profession, or vocation, or any, let me make this, how do they do this thing? Jeez. So that is, okay, so personal income tax is a tax that is imposed on the gain or profit from any trade, business, profession or vocation, or any salary, wage, fee, allowance, and all of that from employment of individuals. And personal income tax is backed up by the Personal Income Tax Amendment Act 2001. The act is administered by the various state board of internal revenue of each state of the federation. Each state has its own board of internal revenue that administers the personal income tax. And the scope of the act covers taxation of individual in employment, taxation of self-employed / sole trader, partnership, assessment, taxation of trust, estate and settlement, and taxation of non-resident individuals. And we all know that personal income tax is commonly referred to as payee, which is an acronym for pay as you earn. And in the context of the Act, what is an individual? Who is an individual, rather, sorry. An individual is every individual or corporate soul or body of individuals deemed to be resident for that year in the relevant state under the provision of this Act. And there are exceptions. Okay, let me instead of just reading and all that, individual is every individual or corporate soul or body of individuals that is in when we talk about partnership, that are residents in a relevant state in a relevant year. Everything must be the relevant state, must the individuals or individual that we are talking about must be residents in a relevant state in a year of assessment. There are exceptions to this, and the exceptions are officers of the Nigerian Army, the Nigerian Navy, the Nigerian Air Force, the Nigerian Police, other than in the civilian capacity. Those that are exempted from this residency rule. And then officers of the Nigerian Foreign Service, and every resident of the FCT, Abuja, and a person that is outside Nigeria but derives income or profits from Nigeria. Those ones are to be assessed by another, they are to be assessed by another body, not the state's internal revenue service. All these people that I've listed, these exceptions, they are administered to tax by the FIRS. And the implication of this is that individual residents in a particular state of the Federation shall account for their income tax to the state of their residency through the State Internal Revenue Service, while those, like I said above, are accountable to the federal government through the FIRS. So anyone that is a member of the Nigerian Army, the Nigerian Navy, Air Force, and the likes, or officer of the Nigerian Foreign Service, or any person that stays outside of Nigeria but generates access to tax through the FIRS. But you know, in Nigeria, God help us, we have quite a number. Like for instance, me, I know of 2 people that don't stay in Nigeria, but they have businesses. You know, we are in the era of jackpotting. So the person actually had jackpot, but the businesses are still running in Nigeria, getting profits and getting his income from Nigeria, but he's still being assessed to tax. That is if they are paying at all with the states that he was in at the time. May the Lord help us in Nigeria. So how do you determine residence? Residence of an individual plays an important role in the determination of the tax authority to which the individual will be liable to pay their taxes. This is the example of this. You'll see a lot of people living in Ogun State working in Lagos, working in Oyo State, living in Lagos. You know, this is very common. So how do we now determine the residence of a relevant individual? An individual is termed resident in Nigeria in any year of assessment if they are domiciled in Nigeria. Of course, they sojourn in Nigeria for a period amounting to 183 days or more in a period of 12 months. Or they serve as diplomat or diplomatic agent of Nigeria. Okay, these ones are the ones that, for instance, you know, they sojourn, they come in and out of Nigeria. We see a number of people. I spoke with someone yesterday. I didn't even know they had traveled. They didn't jackpot. You know, they say they came to Nigeria for for a few months, they are back, they are still coming back in September. So that person, actually, during the time that they are in Nigeria, they have businesses, so they earn money and all, but they spend most of their time of their stay in the UK. But in Nigeria, they can come and spend 3 weeks and go back and then come again like that. So now, will that person be termed as a resident in Nigeria? I'm asking, is a rhetorical question, but according to the law, for someone to be resident in Nigeria, that person must be domiciled in Nigeria. That person must sojourn in Nigeria for a period amounting to 183 days or more in a period of 12 months. So it's not that, okay, last year you did 4 months, upper year you did 3 months. No, it must be in a period of 12 months. And they serve as a diplomat or diplomatic agent in Nigeria. And then, of course, the next one is the non-resident individual. And the non-resident individual is a person that is not domiciled in Nigeria or who stays in Nigeria for less than 183 days in a 12-month period. A non-resident individual becomes liable to tax in Nigeria from the day it commences trading, business, vocation, and the likes. Excuse me. And in the case of employment incidents, like I said, this is a very practical class. We are going to be answering some questions in our minds or in our hearts, or we'll be asking or be discussing all this. I'm sure we all know one or two people that fall into this category of non-resident individual but earn money in Nigeria. They are trading in Nigeria. We're still going to get there. Residency and nationality. We should not confuse residency with nationality. The Nigerian tax law attach importance to residence and not nationality. Therefore, irrespective of whether you are a citizen of Nigeria or another country, the same standard applies to you as long as you are a resident in Nigeria. We see some people come to Nigeria and, for instance, I know someone that stays in the UK and their driver's license, I heard they can use it to drive for a period of a month or something. I stand to be corrected. So that person, though a Nigerian, but does not stay in Nigeria, cannot say they are Nigeria, or someone cannot ask them to pay taxes as long as none of this what's that thing I'm looking for? As long as they do not fulfill any of these factors above. So residency and nationality should not be confused. And then another thing is the place of residence. Place of residence, as it relates to an individual, means a place that is available for the domestic use of an individual in Nigeria on the first day of a relevant year of assessment, except an hotel, a rest house, or all those short lets, or other place which is a temporary residence. In cases where an individual has more than one place of residence, the principal place of residence is determined as follows. We have a lot of people. We know people that have more than one place of residence. Like I said, they stay in Lagos, they stay in Ogun State, or they stay in Oyo State, or they stay even in the north to work in the north. Their families are here, so they sojourn between the different states of Nigeria and have places that they stay. But the principal place of residence, according to the law, is determined as, for an individual with only pension as their source of income, an individual with only pension as their source of income will be their usual residence, the place where they stay, the place where they sleep and wake up. The usual residence is their principal place of residence, where they sleep and wake up, their principal place of residence, where they spend most of their time. And that is for individual with only pension as their source of earned income. And then for individual that has source of earned income other than pension in Nigeria, that place that is nearest to his place of work will usually constitute the principal place of residence. I don't know if this makes sense to us. An individual that has source of earned income other than pension in Nigeria, the nearest place to his usual place of work will constitute the principal place of residence. Now, this answers our question of those that are living in Lagos or living in Ogun State, Mowe Ibafo, and all, and working in Lagos. That's why the Lagos State government, Lagos State Internal Revenue Service, will be the one to assess them to tax. But you ask, they live in Lagos, they live in Ogun State, but work in Lagos. And we are talking about residency where someone lives, where they live rather, should be where there should be access to tax. But here the law says that please, I'm being told that my internet is unstable. Please, can anyone hear me? Am I audible? Am I clear?
Yes, we can hear you loud and clear.
Okay, thank you very much. So, like I said, according to the law, the nearest place to the person's place of work will constitute the principal place of residence. And then in case of individual who has only sources of unearned income, that place he usually resides constitutes the principal place of residence. We have a very big taxpayer in Oyo State that is old, is a big taxpayer. And when we talk about big taxpayer, his tax annually runs up to like 80 million, if not more. But they are unearned income. It stays in Oyo State. But most of these businesses that he has, that he's getting, dividend from and all, are scattered all over the country. But he stays in Oyo State. That's why he pays his tax in Oyo State. That's a good example. I don't know if you have any other. Also, individual holding foreign employment. This one is so common right now. Living in Nigeria, but working for companies all over the world. I don't know if you know of this, all this remote platform. For instance, I do work sometimes on Upwork, get a few jobs on Upwork, that I work for people in like India, China, all those places. For some people, for that one is on a freelance basis, but there are some people that actually hold employment, that they are being employed in the abroad. I'm going to use that word, in the abroad, that is not in Nigeria, but they live in Nigeria. And the advent of COVID has made this even more prominent right now. Companies shutting down. They've seen the reason why, okay, we don't need to have a physical office. We all can be scattered anywhere in the world and work, converge, do virtual meeting. And these things are effective. They save a lot of cost. So now, like I said, the paradigm of remote work has swiftly emerged as the prevailing trend following the global repercussion of the COVID-19 induced lockdown. Escalating operational expenses have led both local and foreign enterprises to embrace remote work setup. There was a time, I think, during that COVID, that Twitter shut down, that people were working remotely and all. Like my younger sister is in the America and is in the abroad and working for a Nigerian company here, where she was working with them before she left. And apparently, maybe because they see her as a dedicated staff, they didn't want to lose her. So they said she can still work with them like that. So we also have those that are vice versa, that are employed abroad and are working in Nigeria. They are living in Nigeria. These people are non-resident employers. They have reside here. They don't reside here in Nigeria, but have business interests here in Nigeria, and they've adopted remote work for their staff, especially if that business, the nature of their business does not really require a physical presence within the country. So this has facilitated employees working beyond their employer's jurisdiction. Nevertheless, it is crucial to differentiate between non-resident employers and non-resident companies. They are different. A non-resident employer denotes an employer that lacks a physical establishment in Nigeria, but engages in activities not mandating business registration, but yet having contractual agreements with Nigerian Okay. Please, can you hear me? Hello.
Yes, we can hear you.
Okay, thank you. So, as I was saying, non-resident employers, they lack physical establishments in Nigeria, but they have people working for them in Nigeria on employment basis or on freelance basis. While non-resident companies, they possess a significant economic presence in Nigeria. They have economic presence in Nigeria. They are registered companies in Nigeria. So they incur income tax responsibilities with stipulations of the Company Income Tax Act. And it is outlined in this significant economic presence order. However, the personal income tax obligation of a non-resident employer hinge on the specifics of the contractual agreements with their workforce or consultants. You know, for non-resident companies, you are already bound by law, by the Company Income Tax Act. So you have to fulfill all the regulations, all the statutory obligations of the law. But for non-resident employers, they have their tax obligation is not as straightforward as that of a non-resident company. According to section 31, section 31B of the Personal Income Tax Act, as amended, tax is levied on annual earnings from sources within or outside Nigeria, and which encompasses your salary, your wages, your fees, allowances, or any other form of remuneration derived from employment, including compensation, bonuses, and all the likes. So in instances of employment, payee regulations impose upon the employer the duty to calculate the monthly payee tax owed on the employee's income, deduct that said tax, and remit it to the relevant tax authority, which is based on the employee's state of residence. There's nowhere in the Personal Income Tax Act that explicitly stipulates exceptions pertaining to the employer's residency status. It is mostly employees' residency that is the bone of contention. So, however, the obligation to this obligation extends to both resident and non-resident employers within Nigeria. So whether you are an employer in Nigeria that is resident in Nigeria or employer that is not resident in Nigeria like the NR is, they are still bound by law. So, but you know, we all know how Nigerians are. So there is this challenge of the numerous states taxes process, the numerous states that the employer will have to be relating with, will have to be filing returns with, and all of that. And they need to comply with all these regulations, comply with all these prerequisites. And all this non-compliance can arise to penalty that can be substantial to the NREs that are operating in Nigeria. So the onus of ensuring that taxes are filed will be on them. Please give me a few seconds, please. Sorry, apologies for that break in transmission. I needed to just fix something here. Okay, so like as I was saying, for employees that have contractual, that are employees, like I said earlier, there are some that are based on employment contracts. Their annual returns will be on the employee, declaring their income and filing such with their relevant state tax authority. But for those that are autonomous contractual agreements that involves NRC and Nigerian consultants, the tax that is applicable under independent, even both individual or individual is withholding tax and is at a rate of 5%. NREs, non-resident employers, they are not the act, the Personal Income Tax Act is not it does not explicitly exploit. I am doing the right thing. It is a practical challenge that is real, that is happening around right now. The law has now stipulated a 5% withholding tax to be deducted from the pay of the freelancer or the independent contractor. And the sum, the withholding tax, is on the non-resident employer. The responsibility of deducting it is on the non-resident employer, and the non-resident employer remits it to the tax authority. Remits it to the tax authority. Please, I saw a message, so I felt maybe I've been thrown out of the class because of network. I'm going to take that again. Because of the peculiarity of the Personal Income Tax Act, that is mainly on individual, that is mainly on residency of individuals, and non-resident employers they don't have a physical presence in Nigeria. So the tax that is due from that agreement between that non-resident employers and Nigerian contractor working for them is withholding tax and is at the rate of 5%. And like I said, the responsibility for deducting that tax lies with the paying entity, which is the non-resident employer. And that non-resident employer, after deducting it, remits this amount to the pertinent tax authority. What is pertinent tax authority? The tax authority that hold on please. Why is this thing doing like this? What's wrong with my network? Hello, can anyone hear me? This thing is going off.
Yes, we hear you.
Okay, thank you very much. Okay, I think that is clear on that NREs, because we have a few examples in my office. That issue has come up about twice right now. The contractor involved needed a tax clearance certificate for something. I think they want to access something, so they require that they bring their tax clearance certificate. And unfortunately, the person they are working with is not a Nigerian company. Is a Nigerian, like the NREs. They work for someone in the abroad, and they needed a tax clearance certificate. And we still have some Nigerians that want to do the right thing, and we know that some people just want to, okay, just give me my tax and declare whatever it is you want to declare and pay. Just let me pay. And so the person had to, visit us, and we had to ascertain. We worked with the NRE concerned, told the person of their obligation, and the person started deducting the withholding tax, and we started filing for the person, and we're able to get the tax clearance certificate for that person. The next one is partnership. Partners in partnership are deemed to be resident where the principal office or the place of the partnership is situated on the first day of that year. This one, I used to work with an audit firm that have offices in Lagos State, in Abuja, in Port Harcourt, and in Oyo State. And it's a partnership. And all these offices, they have different partners in these different offices. So how they are assessed to tax is this: each partner is assessed to tax where their office is. For instance, partners in Lagos, they pay their taxes to LIRS. Partners in Port Harcourt, they pay to Port Harcourt. Partners in Abuja, they pay to FCTIRS. Partners in Oyo State, they pay to OYIRS. So that is how partners in partnership are taxed. The other time I talked about non-resident companies that have significant economic presence in Nigeria. We also have individuals that have significant economic presence in Nigeria. The gains or profits of the Finance Act 2020 introduced the significant economic presence rule for personal income tax as well. The gains or profit of the trade or business will be taxable in Nigeria when an individual, executor, or trustee outside of Nigeria provides technical or management or consultancy or professional services to a person that is resident in Nigeria. This in plain English is this: there are some people that, okay, I have a client that she organizes training. She's an event planner, but not event planner of Ashwebi type, but that organizes different events for corporate bodies, trainings, and all. So she gets people from abroad, from Italy. Some they do virtual. So while paying to them, to these individuals, the company in Nigeria that is enjoying that service have the responsibility to withhold a final tax of 5% on whatever it is that they are paying to that person abroad that has rendered a service to a person that is resident in Nigeria. In Kenya was contacted to deliver a training to a Nigerian company, to their staff. It's virtual. While this Nigerian company pays that Kenya individual, the onus, the responsibility of deducting the final tax, that is the only tax that is due on that arrangement, is withholding tax, and is a final tax. It is the company that is enjoying it that will withhold and remit to the relevant tax authority. I hope that is clear. So the fact that someone, at the end of the year, while you're preparing your account for a company, you do something, on your expenses, there's training, maybe at the amount to like 40 million. And no, the tax authority will ask, okay, what's the basis of this? Because that for training anyway, you must withhold 5%. You must withhold 5% if it's individual, or 10% if it's company. There's a tax on it. So if you now say that, but the person, because there's now this problem of, okay, if I now withhold, the person does not stay in Nigeria, who am I paying it to? The fact that the person is not in Nigeria does not exclude you from withholding that tax and filing it, because you have enjoyed a services that was imported into Nigeria. A person that is resident in Nigeria has enjoyed the services from someone that does not stay in Nigeria. And then this is also partnership assessment. Like I said, about 12 partners scattered in these 4 different. What is a partnership? A partnership is a relationship between 2 or more individuals making profits. We all know that. And it's partnership as we all know that. Partnership does not pay tax. It's a collection of individuals. Rather, and they have access to tax individually. To file tax returns of each partner with it. Hold on, please.
Elizabeth, your voice is off, but meanwhile, let me, for those of us that are attending, I can't see your name, like someone is using Infinix 10, 12, somebody is using Iru Afemi, something like that. Please edit your name correctly so that we can get it correctly, please. Well, Uncle Bros, edit your name to get it. Galaxy J14, edit your name as well. J4, okay, call, please. So that we know you call you by your name. Okay. So you're welcome. Also sorry that we started late. No, edit it. You can edit it yourself. You understand? Edit the name. Don't put. But if you cannot edit it, then write it out in the chat box. I will help you edit it.
Yeah, I'm so sorry. I didn't know that I've been thrown out though. That I've been muted. I didn't know how to understand. I was just talking.
No, please.
That was why I usually check from this. I didn't know I'd been muted. Sorry.
No problem.
I don't know where I stopped actually. Where you stopped hearing me from. Okay, I'll take this partnership all over.
Yes, partnership, exactly.
Again. Okay, like I said, partnership is a relationship between two or more individuals carrying on business with a view to making profit. And in Nigeria, partnership as an entity is not access to tax. Rather, the individual partners are access to tax because they are viewed as a sole trader in business. They are sole traders that come together to run a business to make profit. And partnership business is required to file tax returns of each partner with the tax authority where the partner. And how do we determine the divisible income? We all know this. This is not this is nothing technical. The net profit, we had back all the expenses and all. Like I said, we're not going to be doing how to compute taxes and all. Income derived from partnership. The partner's salary, interest on capital received by a partner, the passage costs or expenses incurred on a partner, share of profit, and the likes. These are charts. Okay. Now, the fundamental concepts, like I said, all I've been talking about since just theory that I'm sure we all know. Now, fundamental concepts. The persons or body of persons responsible under the law of a territory to assess and collect a particular tax is called the relevant tax authority. And the relevant tax authority in relation to an individual is the tax authority of the territory where the individual is deemed to be residing. We have talked about residency earlier. And a territory is a constituted location such as any state of the federation, local government area, and the federal capital territory. And how do you determine the relevant tax authority? Below is the tabular description. We are going to look at the tabular description of the relevant tax authority through which they are assessed to tax. I think earlier there are about 3 or 4 categories of people that are not affected by the residency rule. So we are going to be starting from them. I'll start from the officers of the military and the police. Like I said the other time, the access to tax, the tax that is due on their income is administered by the Federal Inland Revenue Service. And individuals other than officers in the military, other than officers in the police and foreign ministry affairs are assessed to tax by their relevant state internal revenue, the state of residence that they belong to. And residents of the Federal Capital Territory, they are assessed to tax by the FCT IRS. Foreign diplomats to Nigeria, we have loads of diplomats in Nigeria, they are assessed to tax by the tax authority of their own country. Nigerian diplomats that are serving abroad is FIRS that collect their PAYE. Nigerians working in embassies and UN organizations located in Nigeria, it is the state IRS where of their residents that collects their PAYE. Excuse me. Nigerians without diplomatic status that are working abroad, it is the country of their residence. Non-resident individuals is FIRS that collect. Non-resident companies. And this leads us to chargeable income. Once an employee is a tax resident in Nigeria, income tax will be payable on the worldwide income of such employee. Worldwide income. And worldwide income refers to income that is received within and outside Nigeria. Within and outside Nigeria. Meanwhile, income that is able to pay IT income on which no further tax is payable. For instance, now, if someone had already, for an income that you received or that you earn, withholding tax had already been deducted and it's a final tax on that particular income, it will be deducted from your income that is chargeable. And there are some tax exempt items, and then allowable business expenses and capital allowance will be deducted from your chargeable income, from your income to determine what your chargeable income is. And this is also to earned income. On earned income, benefits in kind, all these things are what constitutes individual. Earned income are income that are received from actual work done or services rendered. It includes income from trade, income from trade, from businesses, from vocation or profession, and income received and allowances. Those are earned income. Your direct income that you got from rendering a services or work done, or your income from your business or trade, or income that is salary that is received from employment, which is salary or allowances. And then we have unearned income. It is income received from investments or rights granted to third parties for the use or exploitation of assets such as dividend, interest, rent, royalty. It is like the taxpayer I said earlier, that is one of the big taxpayers in Oyo State. The man is an old man, but he's still paying taxes because he still receives dividends, interest, rents, royalties from his various investments all over. It's scattered everywhere in Nigeria. And then benefits in kind. These are expenses incurred by an employer for the benefits of the employee. This benefits in kind it landed me in trouble
You seem to
years ago.
You seem to be cracking.
But that's not what it's to share today. So I was told my internet connection is unstable again. Please, can you hear me? Hello.
I think for the
Like I
past
said,
20
expenses
seconds.
in the personal benefits of the employee are non-monetary. Hello? Hello? Can you hear me?
We can hear you now. Go ahead.
Okay,
Your network was unstable
Can't
for
hear you
like
well.
30
Can't hear you well.
seconds.
It has been cracking for the past 2-3 minutes.
Is it better now, please?
Yes, but you have to review when you say benefits in kind. Since then, we've not been hearing you.
Okay, can you hear me now?
Yes, it's better.
Thank you. I was is network.
Also share your slide because it went off.
Okay, thank you.
I think the person with the video should turn off the video so that it won't affect the network.
Okay, thank you. Yeah, I was talking about the benefits in kind.
Can you turn off the video for Galaxy J4 person? Sometimes it affects the network.
I think it's off right now, right? Okay.
Yes, you can go ahead.
Yeah, benefits in kind, like I said, are expenses that are incurred by an employer for the personal benefits of the employee. They are non-monetary remuneration of an employee. And for tax purposes, an employee is deemed to have earned that income and it is liable to tax. For instance, provision of accommodation, like a vehicle, assets like vehicles, or support staff such as drivers and all for an employee. The employee is deemed to have earned that income, and that income that benefit is liable to tax. Basis for assessment. The basis for assessing individuals to tax shall depend on the source of income accruing to individuals. For instance, income from employment such as salaries and wages, allowances and bonuses, BIK, as well as income received from previous employment are assessed to tax on actual year basis. So salaries and wages and all are assessed to tax on actual year basis. Income that are derived from investments, rights granted to third parties for the use or exploitation of an asset, such as dividend, interest, annuity, rent, and all, are set to tax on preceding year basis. And income that is derived from trade, business, vocation, or professions are assessed to tax on preceding year basis. So it is only salaries and wages, allowances, bonuses, and all that are assessed to tax on actual year basis. And we have tax relief and exempts. The CRA, Consolidated Relief Allowance, sorry, that's a Consolidated Relief Allowance. It replaces the personal allowance, all the allowances that in PITA 2004, that dependent relative allowance, children allowance, and also everything has been has been replaced, and we now have the Consolidated Relief Allowance. And the 2011 amendments grants Consolidated Relief Allowance as follows. Like I said, this is not new to us. Higher of 200,000 or 1% of gross income plus 20% of the gross income. And gross income here is defined as the total income, but excluding franked investment income of a taxpayer. And then the National Housing Fund contribution, which is contribution made under the National Housing Fund scheme, which is usually 2.5% of the total monthly income of an employee. And also the National Health Insurance Scheme, which is a contribution towards the health insurance of an individual with a government-approved HMO, health management organization. And then life assurance premium, any amount that is paid as premium for life assurance policy on the life of a taxpayer. National pension scheme, amount contributed under the Pension Reform Act by the employee. The mandatory contribution of 10% by the employer and 8% by the employee. In practice, we have seen employers doing more than the 10%, depending on the policies and depending on how much they love the employees. And then gratuity. Administration of personal income tax in Nigeria. We are going to be talking about the assessment, the payments, and the penalties. All employers of labor are expected to register with relevant tax authority as an agent of the state government for the purpose of deducting and remitting PAYE tax from employees' salary. The company or organization must apply to the area tax station for consent to operate the PAYE scheme. I'll give an example, another example of a client that just started deducting PAYE from the staff salary. I think he had about 5 employees, and he started deducting PAYE. And to my amazement, because I think he ran into trouble with tax authority, he didn't consult anyone, any consultant, to even give him the tax table to use. He didn't get an accountant. He just got one NGO that did accounting, ND accounting, and that one just suggested that they can do 10%, and it's employer salary, and not remitting at all. And when he now ran into trouble with the tax authority, he said he didn't know that he was supposed to register with anyone. He felt that his FIRS that will come at the end of the year to ask him, and at the end of the year, when they now ask him, he will now take the money. He said he was warehousing it, take the money and go and pay it into bank. And the question asked was, which bank are you paying it into? But like they always say, there's no ignorance in law. So every employer of labor, as long as you have started employing people, you are an employer of labor, they are to register with relevant tax authority as an agent of the state government. The company or organization concerned must apply to the tax station for consent to operate the PAYE scheme. Alongside the application is the evidence of registration, incorporation of the organization, and the TCC of one of the director or proprietors. So it's also an avenue to bring in as many people into the tax net. For instance, if the director or the proprietor is not even registered for tax purposes, does not have a tax clearance, so the state is an opportunity for the state to bring that person into the tax net. After the approval of application, the business enterprise is allocated a unique reference number that must be quoted on all subsequent correspondences with the relevant tax authority. Okay. Individuals assessed to tax under PITA are to register for tax purposes with the relevant tax authority where the taxpayer is deemed to be residing. Every employee is given a unique tax ID by their respective state IRS. Excuse me. The taxpayer is required to submit a tax return to the tax authority of the residing state, outlining the total income for the previous assessment year, along with the calculation of the applicable tax on the said income. This submission should be made within 90 days following the end of the assessment year. For individuals, 90 days following the end of the assessment year. In other words, individual taxpayers need to file their tax returns on or before the 31st of March each year, encompassing the income earned in the preceding year. Failure to adhere to this time frame results into a penalty of 50,000 naira. And I've seen someone paid it. Okay, I'm checking the chat box regularly.
To them when you need when there's anyone you need to attend, I'll draw attention to it. Thank you.
Okay, thank you. Sorry. Sorry, please. I need these things to go away. Section 81 of the PITA mandates employers to submit a report to the tax authority located in the employee's primary residence. This report should show the complete remuneration disbursed to the employee, along with the tax amount withheld through the payee scheme during the previous assessment year. And the deadline for submitting this report is January 31st of the subsequent assessment year. I give an illustration here. Emolument paid to an employee in 2017 must be filed on or before January 31, 2018. Failure to file these returns, as stated in the Act, would result into a payment of 500,000 naira by the company. Employers are expected to deduct monthly PAYE from employee salary and remit the tax to the relevant tax authority through the designated banks, and the due date is within 10 days of the next month. Failure to do so will attract 10% penalty of the amount deducted but not remitted, in addition to the tax liability. Fine. I think that some states are waking up to this. Some are still lagging. That's why you see some companies, they play around with this PAYE, not remit it, fine, they'll deduct it. It's a way of, in quotes, like they always say, managing cash flow. They know they are still going to pay it. They know that before the end of the year, before filing, they are still going to pay it. But that is them flouting the
Elizabeth, your voice is no longer coming out, but we have two questions. We have two comments here. Is gratuity exempted from tax? That's from Azuike. Then Rekia saying, please, isn't
what you have deducted and what you have paid to them. So, but the monthly deduction of PAYE from employee salary must be remitted and be paid to the relevant tax authority, and the due date is within 10 days. So you can do it at the end of the month, as long as it's not up to the 10 days of the 10th day of the following month. And any undisputed assessment must be paid not less than 30 days from the date of receipt of any of the assessment. For instance, after maybe there's a tax audit, or maybe there's an assessment or an additional assessment, or there is just, for instance, like a review, and you are not disputing the assessment, the additional assessment, that must be paid not later than 30 days from the receipt of the assessment. Okay, I'll give another example here. I have a client that is assessed to tax under direct assessment. I asked her, she's supposed to, okay, we filed so that she wouldn't pay the penalty. We filed, she was given her assessment. This is under direct assessment. You file, and then you declare whatever it is your income is. We had issues with that because what she declared, the Internal Revenue Service had to, they have their ways. If employees, so they knocked that off, and they revised their assessments, and we're giving the assessments, and we did not dispute this assessment. And I told her that we have been given this new assessment, we have 30 days to pay. She said, no, is it not Nigeria? Is it not Nigeria? Is it not Nigeria? But Up till now, that assessment has not been paid. And that's one of the problems I have with a Nigerian government. You are the one that states the law. You are not enforcing it. So people does not see the reason to comply. The assessment has not been paid right now, still, and it has not generated any penalty at all so far. But I think FIRS is waking up on that. That's for another day. So any undisputed assessment must be paid not later than 30 days from the date of receipt of the assessment, as long as you are not disputing it. If you are disputing it, then we'll know. Employer shall, within 6 months of commencing a business, deduct tax from emoluments of employees and remit to the relevant tax authority. Okay, now I'll give another example. That person I told you about, that I told you earlier, that started deducting 1% across board. He started business about 2 years before he started deducting this PAYE, and there was he started business and started employing people, but did not start remitting anything or deducting anything from the staff's salary. His defense was, how much am I paying them? I'm going to deduct money from their salary. So in his own defense, in his own philanthropy of what am I going to call that, he felt 1% should be fine. 1% should be fine. He thought it was just something arbitrary. It's a law. So that's an example of someone that took the laws into their own hands and started doing what they like. But by the law, you are required as an employer, within 6 months of commencing business, start deducting tax from emoluments of employees. But first, you must register and you must register with a tax authority, so that they can give you permission to start operating the PAYE scheme. So any employer who fails or refuses to register with the relevant tax authority within the time specified in the Act commits an offense and is liable on conviction to pay 25,000 naira. See, this is the problem. This 25,000 naira, people see it as small money. They're like, is it not 25? We'll know how to do it when the time comes. But let the government increase this penalty. You will see increase in compliance. But what do I know? So now we have the tax rates. Nigeria adopts a pay-as-you-earn system to calculate the personal income tax of employees. It is called payee tax, like I said. That tax rate is progressive, and it progresses from 7% to 24% of taxable income. And the band range is from 300,000 to above 3.2 million in a year. And this is the tax rates. The first 300,000 up to above 3.2 million. Self-assessment. I want this thing to go away. Yeah. Self-assessment, taxation of self-employed, and direct assessment. These are the same. They are the same thing. They can be used interchangeably because it refers to the same category of people. So sole traders are individuals that run or operate unincorporated businesses or business name, because it might be incorporated. So it's not only that. Sole traders are not only individuals that run unincorporated businesses. They also run incorporated businesses. Some just do business name. They want to take it a step ahead and not just be operating without incorporating. So they just do their business name. So they are sole traders. They are referred to as self-employed or sole proprietors. And an individual is deemed to be in business if they engaged in a profession or a trade or a vocation. And what constitutes a profession? As an accountant, that you are doing me and you and co. You are just doing your me and you and co, rendering services, tax services, secretarial services, accounting services, and you are getting money. You are deemed to be engaged in a profession. because you have acquired a special education, knowledge, and skill to be able to carry out these services. Vocation, it describes an individual's regular calling or the activity engaged to make a living, what they do. There's difference between a professional and just someone that also renders services. For profession, it's advanced. For vocation, it's just the basics. You know how to sew good clothes and all. It's a vocation. A trade, anything in the nature of a trade, buying and selling. This definition is too open-ended and vague. Hence, the court has provided the following guide to determine whether an individual has engaged in a trade or not. Frequency of transaction. The frequency of transaction will help us determine whether a trade has existed or not. So the number of times a purchase or sale occur will determine if a trade occurred or not. So when you are trying to determine what a trade is, the frequency of transaction will come to play. The duration of ownership. The length of time an asset or an item is owned or held before disposal can indicate if a sale occurred or not. Also, the subject matter. Is an asset bought for personal use or for generation of income? Also, manner of acquisition. A trade exists if the purchase or sale of an item involve advertising, contract of supply, or invoicing. And the motive. A trade exists if the motive of transaction is to make profit. For instance, you have a car that you are using and the car is old and you decide to sell it. That's not trade. You are not trading in cars. And you didn't sell it so that you can make profits, so to say. You sold the car, it's no more in use. You need the money to do other things. Self-employed are required to file tax returns on self-assessment or direct assessment basis with the relevant tax authority. Okay, I'll give an example of someone that I know that is a business owner. I think he's a business owner. Let me leave it at that. And he wanted to beat the tax authority by putting his name on the payroll and he said he's part of the employee. He's part of the staff of the company. He puts his name on the payroll and access to tax based on that. Of course, that didn't fly with the tax authority because they said he's the owner, he's self-employed, and he's getting profits from that company, he's getting salary, so he's assessed to tax on direct assessment. When determining the taxable income of a sole proprietor, the following rules are applicable. Sole traders are assessed to tax under the Personal Income Tax Act. So some you will see in practice, someone will tell you that, but I have paid my CIT. I don't need to pay tax again. You cannot be charging me tax on, you cannot be collecting CIT from me and still be collecting personal income tax. They are two different things. CIT is on the profit of the company. PIT is on your own income that you are getting from the company. Directors and self-employed of companies who have other sources of income other than employment income are required to file self-assessment return on or before 31st March of every year. This is very important. I don't want us to forget this. Very, very important. You might have clients that are self-employed, that are working on their accounts, and they are the director of the company. They are to file their assessment, their return on or before 31st of March every year. They must. I know LIRS does not play with their own money. For other states, even most states, because at the end of the period or the year you want to file, they will calculate your LRP. So don't allow your clients to pay unnecessary penalty. No, on or before 31st of March every year, you must file self-assessment return for the directors of your clients, or if you are self-employed, file same as well. Earned income of sole traders must be separated from unearned income. Let's note that all expenses incurred for personal benefits of the sole proprietor are regarded as appropriation of profit, and they are not allowed in determining trade income. Self-employed are not allowed to make donations except to recognized research centers. And in summary, personal income tax is guided by the Personal Income Tax Act. This is a summary of all that I've been saying since morning. Is guided by Peter, 2004 as amended, and the tax is imposed on income of individuals, corporate sole or body of individuals, communities, families, and trustees, or executors of any settlement. An individual is entitled to a CRA of 200,000 or 1% of gross income, whichever is higher, plus 20% of the gross income. That's the relief that is given to individual. And the rate of tax ranges from 7 to 24%, depending on the amount of chargeable income. Individuals are subject to minimum tax of 1% of gross income, where the income is less than 300,000 per annum. The tax is administered by FCT / the State Inland Revenue Service in respect of their on non-residents, members of the armed forces, police, officers of Nigerian Foreign Services. And the due date for filing returns of tax is 31st March of every year. The due date for remittance of payee is 10th day of every succeeding month. Emoluments and tax deducted from the January of every year. A person who fails to file a return shall be liable on conviction to a fine of 5,000 and a further sum of 100 naira every day during which the failure continues, or imprisonment of 6 months or both. An employer who fails to file a return shall be liable on conviction to pay, this is 50,000, not 5,000, to pay a penalty of 500,000 for body corporate and 50,000 in the case of individual. Someone is saying something. Okay. And then this is also the practical session. But before we go to that, I see some questions. Mr. Ayonamdi, I don't know, can I attend to them now?
Yes, please attend to them. And we will like to get feedback from everyone at the end of the session, either by email. Can you get our slide? We'd like to get feedback. We would like to have us in a WhatsApp platform for those that would like to join. So we'll take that at the end of the session. So you just click the link when you get the mail to join that. We hope to grow like a family.
Isn't payee filed and remitted at the end of the month? I think I've answered that one. Yes, it is filed as in deduction, monthly deduction is remitted and paid at the end of the month. Hold on. The second one is gratuity exempted. Sorry, this thing should go from tax. You will notice, okay. So I want to go back so that we can see, because I want to believe that this was addressed. Tax reliefs and exempts, gratuities. It's a tax exempt. I hope that answers your question. It's tax deductible. Okay, I don't think there are other questions anymore. Or do we have any? So that we can go to the practice. Okay, someone raised hand. Miss, okay.
Good day.
Okay,
good day.
Yep, good day.
Yeah. My question is on the NRE, that's the foreign employers of consultants in Nigeria.
Okay.
I have two questions actually, but this is the first one before the second. Is the 5% withholding tax you are talked about, is it final?
Yes. I said it here. Hold on. I have to go back. Yes, it's a final tax.
So
Like I
if you
said.
have a freelancer in Lagos, and then he or she is paid by an employer abroad in dollars.
Yes. Yes.
Does it mean that the employer abroad has to remit it in dollars to Lagos Internal Revenue Service? 5%.
Okay, and the currency
in
of transaction. The currency of transaction is dollars, right? The person received that money in dollars.
Yes.
Okay, that one, I think that should apply, because the currency of transaction is the currency by which you pay the taxes.
Exactly. So what if the person has other income, other sources of income apart from that very service? What happens?
Okay, like I said, if you notice this, it means at the end of the year while you are filing your returns, or at the end of the month while you are filing your yeah, I think it's individual while you're filing your returns. We have earned income, we have unearned income. We have income from, like you said, worldwide income, both income earned in Nigeria and income earned outside of Nigeria. So the ones that is the final the tax of withholding tax on it, it's not going to form part of the income that will form your chargeable income, because you have already suffered a 5% withholding tax, which is the final tax on it. So the other ones, the applicable rates applies.
But in other situations, normally withholding tax on fees that is not supposed to be final tax. Am I correct?
Yes, but on this one, on the you were talking about non-resident employers.
Yes.
That are working with Nigerian consultants, that are working with people in Nigeria as freelancing.
Yes.
Yes, that's what you're talking about. On the fees they give to them.
Okay, let me ask this aspect of it. If the employer, the NRE, fails to deduct and remit the withholding tax of 5%, how does the relevant tax authority enforce that very law or regulation?
Okay, hold on, please. So in that case, in cases like that, you know that, like I said in this slide, this particular one, the regulation of PAYE, it imposes it on the employer to calculate the monthly PAYE and all of that. But the residency rule does not affect employers, so to say. So the employer does not stay here in Nigeria. It's the employee that stays here in Nigeria. The employee will be the one that should ensure that the withholding tax that's been deducted from his or her salary is remitted to his or her relevant state of the residency, the relevant state authority, so that that employee is able to collect his or her tax clearance certificate. See, what happens in practice is this. Fine, this is book, there's practice, and we know how Nigerians always want to not do the right thing. But at the end of the day, you are still going to, unless you don't have anything to do with government anymore. So it is important for you to ensure that the right thing is done. The income you declare, you have paid your tax on it, so that you can get your tax clearance and you know you are home dry. But you can decide not to do it, which at the end of the day, you're going to be paying more than what you are supposed to pay. Compliance is cheap.
Yes, Elizabeth, I will want to get, maybe not immediately, but since we are going to form a WhatsApp forum, I shall be interested to have the authority where it's stated that for those NRE that remitting one way or the other, the 5% withholding tax is a final tax.
Okay, all right.
I like to have that authority because it's very, very important.
Okay.
And again,
We have Cecilia Eke also.
okay,
I want to ask question.
please, I'm still on. I'm still on. Okay, you want the response?
No.
Or
Once
my
you are
question?
through, Cecilia will be the next person. Once you're through.
Oh, okay. Now, can another question on this scenario is, can the foreign employer, by the wording of the contract, is decline the responsibility to handle the tax affairs of the freelancer?
Please, can you say the question again, please? I didn't get it.
Okay. In structuring the contract with the freelancer,
Okay.
can the NRE exclude itself that is paying gross of tax, exclude itself from having any further responsibility on the tax affairs of the freelancer?
Okay, on that, I need to know the position of the law on that for now. But for now, it's not explicit. It's not, because the position of the PAYE of personal income tax is on residence of individual, residence of employee, not much on residence of the employer. But like you said, I'll find out the position of the law on that and get back to you.
Okay, then a question on another area, please, before I go. It has to do with the responsibility for withholding tax on dividends, which you called on earned income. So for a PLC, the registrars normally remit the dividends to the shareholders. Who should be held responsible for the dividend for the withholding tax on the dividends of individuals?
Okay. I will use this as a practical example. Actually, the paying authority is supposed to pay the net effect to the individual and remit the withholding tax to the relevant state authority, the relevant tax authority of the individual they are paying for. And at the end of the year, that individual can use that withholding tax as a tax credit against their future tax liability. That's the ideal.
Okay, in essence, what you are saying is that the registrar who pays the net dividend has the responsibility and should be held responsible for the withholding tax.
Yes.
Thank you very much.
You're welcome. Okay, you said, okay, there's another question.
My hand is still up.
Okay. Please talk, ma.
Okay, thank you for this incisive lecture. Initially, we joined late anyway, so we are appealing that will you be able to send a recording to us? Because we joined around 11, we are having a network problem.
Cecilia, please let me answer this, Elizabeth.
Yes, sir.
Cecilia, thanks for that question. Our training is not the type that we want you to have the knowledge and don't use it. We want to force you to make use of the knowledge. We want to work with you while you are making mistakes. So even beyond the questions you're asking right here, you have a whole lot of other resources that we can bring in to answer, to attend to these questions, which you can never see through a single video. So if we continue to push out videos, we believe that the participants will just say, oh, I will not come in, I'll come in 30 minutes late, like today now. So many people almost wanted to come in 30 minutes late. Then They will come back and start asking for video, hoping to go watch it, and they will definitely not watch it. Okay. Can you hear me? They will not watch it. So what
I'm hearing, I'm listening.
so our approach is this. After the training session, we will have a WhatsApp platform. We will be getting questions from you on that WhatsApp platform. The ones we can address, we address instantly. We will give you so many materials beyond what you are even thinking of, because, for example, this slide is expected, but there are other resources that we're going to be sharing on that WhatsApp platform, which you will not see through this single training. And there are other resources that we'll get from other firms, other sister firms, which will help. Like I took note of all the questions. Okay, is it okay? Elder, okay. So asked, and even if, let's say, we do not get a satisfactory answer right now, we also think it's a duty from our side to go also and research and get you the answers on the WhatsApp platform. Okay, so it's more like a practical thing, and you will not be getting just on the surface response. All these responses should be rooted in the facts. Like, okay, said, can we have the authority of that document, of that position? That's the kind of thing we should be hearing, so that when you are defending to the tax authority, you will have facts to defend. Because even the tax authority, some of them don't even know some of these things. There's some tax legislation, some tax topics that will raise now. Even though you are 20 years, 30 years in the field, you might not even know about it because you've never seen it before. So let us put hands together, understand that it's not a theory thing, it's practical, and it can help you beyond this, your office or your organization at the moment. Thank you. So that's why we don't do the video thing. We have it, yes, but we will not share it unless it is really it's just the only solution. But I think that for us, it's not the solution, because we want you to have a practical knowledge of it. And you speak with her. In the future, we might even invite you to speak like Elizabeth, to attend to people. So you should be prepared. That's it. Thank you so much.
Thank you. Okay, when I came in, there was an abbreviation she was using. NRE. I didn't start with you. I just said, how you are using NRE.
That's non-resident employers.
Thank you. Thank you.
You're welcome. And then someone asked a question, what about unearned income? Is it taxed using the tax tables? Okay, to answer that question, can you see, I said that an employee is taxed, once an employee is a tax resident in Nigeria, income tax will be payable on the worldwide income of such employee. All your income, both earned and unearned and benefit in kind, everything will be taxed. Everything will be taxed. So I hope that answers. So whether it's unearned, whether it's earned, whether it's a BIK, everything is taxed.
Okay, thank you very much. I actually, sorry, I'm not trying to cut in. I actually asked that question that if unearned income is taxed using the tax tables. I know that everything is taxed. What I'm asking is it taxed is it withholding tax, the 5%, or using the normal tax tables that you give to the first 300,000 at 7%, the next 300,000 at 11%?
Yes. Okay, I would have loved to share. I didn't know that I would need that. This is how it is called. How do you compute your chargeable income? You do the earned income, which is the employment income, which is salaries, bonuses, and income from trade. For instance, maybe you are earning salary and you're still doing business alongside, and then you add the unearned income, which is your interest and dividend, and dividend is a frank. That one is not. It's not chargeable because that one already has suffered withholding tax. So unearned income, interest, for instance, you add it, then you now start. It is after you add that, then you get your what is called your gross income. And after your gross income, you start deducting what's your tax relief, the CRA, and all other reliefs to get the taxable income. And it's on that taxable income that the tax table now applies.
Okay, understood. Thank you.
Okay, thank you. You're welcome.
I have one other question. but I think maybe by the time I read through your notes, I would be able to pull out the answer. You know, for the tax, for the consolidated tax reliefs, you know, you have the 1% on the gross, then there's a 20%, you know, the higher 200,000 or 20%. This 20%, is it the same gross or it is the gross less contribution to pension and maybe to housing scheme?
Okay. This is like Mr. Nnamdi said. I think it was last year, the Finance Act for 2022 now brought another dimension into UK. This is how it is done. For instance, let's go with the CRA first. Is it higher of 200% or 1% of gross income? So you calculate 1% of gross income, and you know that there is a 200%, 200,000 on ground. So whichever is higher, sometimes the 1% of gross income is higher than 200,000. But you see a lot of what applies in what happens in practice is you just the 200,000, because most times it's always higher than 1% of the gross, but it's not all of it's not the same, it's not like that all the time. Sometimes that 1% of gross income is higher than the 200,000.
Yes, agreed.
Yes. So then we now, after you've ascertained that, then you add it to the 20% of gross income, and that includes the gross income. You know, the other time we talked about end income, and I am adding your end income and your unearned income. But after
it is clear, that first part is clear, knowing that 20% of your gross income, that's your total income, everything put together. Now, the part that I'm asking, because there's a second part to it, you know, either 1% of the gross income or 200,000. That 1% on that gross income, because I saw somewhere where it was classified as gross income 1, gross income 2, and the gross income 2, the computation of gross income 2 was different from the computation of gross income 1. That's what I just want to clarify, because I've done that for a number of clients. I just want to be sure of what I'm supposed to do, you know, for the gross income 2, which is the either 200, the higher of 200,000 or 1% of the gross income. That gross income 2 is in net contribution. You know, the payee, the person, the staff is expected to contribute to pension. You know, there's a pension deduction. Let's just use that, and also the National Housing Scheme. That pension, is it supposed to be deducted from the gross income for you to get your gross income too? That 1% will be based on. That's just the question.
Okay, thank you very much. I understand why the question, that point of that gross income 1 or gross income 2. I don't know if, let me stop sharing. I want to share something to be able to explain it clearly. Stop sharing. Sorry, I need to share. I'll share again. Where did I save this document? I didn't know I was going to need it. I would have added it to. Hold on.
Or maybe we'll take it, because of time, maybe we'll take it in, maybe on the platform.
Okay, maybe we'll take it on the platform so that, yes, so that we don't waste time. Yes, because like I said, I also want to take us briefly through the platforms, meaning I want to use the LIRS platform, for instance, just for us to see how it is, how you can navigate through this for people that want to, you know, you have clients that you want to register for PAYE, or you have clients you want to file annual returns for. You don't have to start going to their offices and all. So I want to just share that with us now. Hold on. .net. Hold on, this. I want to sign in. Few minutes, please. Okay, let me start sharing now. Yeah, please, can you see my screen?
Yes.
Yes, yes, you can.
Okay, now for instance, I think this is more, most people are used to this, so I just want us to quickly go through it and see how this is. So I'm going to use someone's for an individual now. I'm signing into an individual taxpayer portal on this. For an individual, you need to put, they said the payer ID should be a prefix N or C. C is for company, N is for individual. See. Okay, this person is I want you to see the assessment that was given to the person. Okay, so the person has been registered for tax. That's why they have this tax profile. So if you have a client, you need to register them for tax with the relevant tax authority. This is Lagos State. So this is if you register for tax, they will be given a tax ID. They will be given a login details. So you can change the password after you've been given your tax login details and all. So you have the profile. The profile will show the name of the taxpayer. This taxpayer, we are still not done yet with the profile. So we will, because the profile picture is important to be uploaded. If you don't upload the profile picture, you will not be able to access the tax clearance. That's what I found out on this. And then there's something called assessment here, where the assessments for that individual taxpayer this is the place where you're going to see the assessment of the individual taxpayer. And before you can get to this assessment, there's a place called returns, where you're going to file your returns for your taxpayer, for your client. You include all this information, the year in view, the salary, the commission. Like the client I shared the other time, this was where we did the ojoro that we did. She was the one that actually said, okay, this is how much I'm earning every month. But is my client. How am I supposed to say, no, you're not supposed to, this is too low? She said that is how much she was earning. And they found out that a member of our staff was actually earning way more than that. And the question is, how can your staff be earning more than you? So it doesn't make sense. So after we now did that, they now gave a revised assessment. It's actually this particular client. They gave a revised assessment for this particular client, and which arises, you can see, this is the returns we filed. This is the returns we filed. I don't want to download, so we can see this is the return we filed at is it 150 annually and all, and they came back and they gave, see, you can see the difference from the total income here that we disclosed and sorry, and the assessments that they actually approved. Because at that returns, that's where you're going to file your returns. And after, if it's accepted, if it's not disputed, your assessment will now be shown here. And they gave us a new assessment here. It's called the approved assessment. You can see the total income here now is 3.6. After we have gone back and forth, they did not accept that our returns. So they gave a new assessment, a revised one with 3.6. And if this money was paid now, we'll find it here. Okay, to pay this money, for instance, the assessment, you go to what is called generate pay or bill and all. It's so explanatory, whatever it is you want to pay for, you list it, you go through the agency here, and then the revenue that you are paying for and all. If I had picked, for instance, let me take one. Hold on. Like, for instance. Let's pick this tax station now. For instance, to now list all the taxes, the revenue that this particular tax station collects. So it could be 10% of tenement rate, for instance, and then you can see that someone asked the other time that is it in the currency of transaction is what you pay your tax on. See, there's USD, there's Euro, there's GBP, the pounds. So for instance, this is Nigeria. We keep the date, click on the start date, the end date, and the recipients like that. I don't want to play because this is a real taxpayers portal. I don't want to cause trouble on this so that we don't have issues. And then if we had paid that assessment, we will see the history here, but that assessment has not been paid. And to make payment for that assessment, you will see it will bring up the assessment, because on this portal it's showing that there is a liability that has not been paid yet. My network. Okay, I think this particular platform actually takes a long time to load. You see, it's coming tech pay. I don't know what is wrong with them. So if that payment is done, it will be there. And then if you have objections, this is where it will be. All the back and forth, everything will be uploaded on your portal, so it is traced. And there's one I want to show us. Okay, here now. All things being equal, if everything were to be fine, you don't have to go to any tax office or do any trouble. Just generate your TCC and you will get it. But see, taxpayer record does not have profile picture. So because of that, they now list a lot of pending in profile picture pending, address pending, individual returns for 3 years pending, annual returns for 3 years employer pending, assessment for 3 years pending. So because of this particular taxpayer cannot access a TCC yet. So I think with that, like I said, it's important to register for, okay, before that, there's something out this is how to guide. For instance, you want to know how to go about any aspect of these things. There's this how to guide. I don't know what is wrong with my network because this thing is open. They just open. They don't drag like this. So you see everything. All you need to know is so self-explanatory. Because for instance, and you are not registered yet, you can use yourself as an example. Register for this, so yeah, you can have access to the portal. And if not, you can, I'm sure you'll see there are ways to go about it. My internet is not stable, it is well. See different guides: individual taxpayer, the e-tax guide, the corporate taxpayer, the consultant taxpayer, like that. So as a consultant, there are guides for you to go through. I like the LRS portal. It's so robust, so user-friendly that you can practically do everything without getting to their office at all. So it's like that. I want to do another one. Oh, GIRS. Like I said, I promise to do for 3 IRS. I hope I'm still in this class. Hello, can you hear me?
Yes.
We can hear you, but I have some questions.
Okay.
I don't know if I can go
Hold on.
ahead.
Hold
Okay,
on.
what's your question, please?
Okay, now this portal is an individual portal. Now, for an organization, for instance, now I have XYZ company and I file for my staff. I make returns for my staff, you know. So am I supposed to come to the portal to upload it, or at what point, where is, or is it the tax authorities that upload it? That's when I now get into my portal, I would see all this information. What's the connection? How is it? The process is really is what I want.
Okay, thank you very much for that question. You can see that when I wanted to sign in, to log in into this, I said I was going to sign. That was what I did. And for the company, I'm going to show us another one. Hold on, please. I want to look for the login details. Hold on, please. Okay, so for the company, like I said, the prefix is always C for company. Okay, now there's a password I'm looking for. Okay. Okay. Now, this is, for instance, a company now. You now want to file returns for your company. The year in view, this is it. Select tax type, annual returns, and then you now upload it. Because you can see it's different from individual. This one, you have to upload the annual returns, and on it, okay, before the annual returns, there's a schedule, the schedule returns, where the name and the amount of each employee will be it's on that you're going to input. I think it's an Excel sheet. They have see it. Let's download template for us to see, because there's always a format that they require. Sometimes it's not that you can see that it's a CSV file. So see now, for instance, this schedule now is required. You are required to upload this schedule, because this schedule states the date of payment, the amount. I want to date of payment, the amount paid, the receipt number, and the period of payments for each period that you are filing for. You upload it. You are required to upload that template. If it's annual returns, let's see. Like I said, this particular LRS platform is so robust. If you just sit down with it, you know what to do. The annual returns now, see the format of the annual returns. The schedule, because you cannot just go ahead and just be imputing schedule. See the surname of the employee, of course, the first name, the middle name, the designation, the nationality, the number of months that the employee has been with you, the development levy, the gross income, annual tax paid, the taxpayer ID, the staff number, email address, and all will be uploaded on this platform for your companies. Sorry, for your company. It will, after you have submitted, it will generate an assessment. No, oh, my network is unstable again. My network is unstable again. So if you upload all this assessment and all, if there's all this schedule, if there's an assessment, like an additional assessment or a revised assessment, it will come here for you to see, okay, you're going to be paying additional liability or not, as the case may be. So like I said, we can all go and familiarize ourselves with this portal. If you stay in Lagos and you have clients that are in Lagos, familiarize yourself with it. And like Mr. Nnamdi said, we are here to always give the support, and no, there's little I can do so that I don't share too much, because without you cannot just register, you cannot just go and sign up on this without being a taxpayer, so that you don't cause trouble for yourself. So, but there's little I can show, because I don't want to be divulging so much information about clients. And like the Ogun State Internal Revenue Service, for instance, I don't know why this thing is not. What is this? This one, I'm not going to lie. This one is easy. I just signed up for myself. I don't stay in Ogun State, but I felt okay, let's play around with this and see. So, and that's how we all learn. That's how we can learn. You go through if all the portal of the IRSs, play around it, so that someone in Ogun State will come to you and say, I want the tax clearance. You just don't say, okay, I stay in Lagos. So you are an accountant. You can even pay a visit to the office, give a list of, have a list of requirements. If someone wants to register, if someone wants to collect tax clearance, be friend with one or two people there, collect their number, chat with them once or time to time. You have issues, you don't have to be there physically. Sometimes you can go there physically. It's good to befriend them and all. For instance, if I tell you my own location, you'll be shocked that I know so much about LRS and all like that. But if I'm an accountant, I have clients almost everywhere. I cannot say I can't offer this service. The one I cannot offer, okay, I'll say I can't. But if it relates to tax and all, it might not be in my jurisdiction. I have friends, I'll just reach out to me, okay, if I need to go, I'll go. If I don't need to go, I'll just use my contacts on how to go about it. And that's me talking about the practical sense of being a tax practitioner. So we're not supposed to limit ourselves to, I only stay in Lagos State, I only do Lagos taxes. I stay in Oyo State, I do only Oyo State taxes. Like that. Don't limit yourself to it. You can have clients in FCTRS, and if client is willing to pay you to go and represent them for tax audit or for tax queries, why not? If not, you increase your tentacles. So I hope by these few things I've been able to share much. So thank you.
Elizabeth, did you talk about foreign nationals, pay tax for foreign nationals?
That are non-residents.
No,
in
that
Nigeria.
are residents in Nigeria, as it relates to employers who have foreign nationals in their employment. Okay, I can, no, don't worry, I can handle that. I can handle that. Please let me just attend to that briefly. Okay. Now,
okay, thank you.
So foreign nationals who are resident in Nigeria go through a unique kind of tax regime, which is not, everything is still subjected to our tax table though. But for maybe based on experience, the tax authorities usually don't accept the income that they declare. So I'll give you an example. Let's assume your client is an entity that is into telecommunication service. Now, when you employ a foreign national to manage a particular skill, say engineering, and that foreign national is from UK or US. Now, what the tax authority will do is that they have a table I'm talking about Lagos, for instance, Lagos State. They have a table in-house they call dim income table. That dim income table. So they will then match the income that you disclosed, that your client disclosed, and the income on the dim income table sheet that they have. So using an example, that American example, in their table, they might have an American living in US as an engineer. You should be earning something close to 60 million naira. That's the dollar equivalent. Yes, when you convert it to naira, about 60 million naira per annum. So they would then say to themselves that such an American cannot leave America, come to Nigeria and earn, say, 10 million naira. So if you disclose 10 million naira as the income, the annual income of that client, they will then say, no, you must, your income, the income should be 60 million. So you should defend it. You should prove it that your client is not earning 60 million naira. So they'll push the ball back to you. So you see the revised the assessment after the audit. If they audit your books, they will come back with, if you have five of such expatriate or 2 or 3, all of them, they'll jack up their pay to 60 million naira. Some cases too, they're so ambitious. You know, they have external consultants too. They'll give them some other hints where they will get the names of the children of this expatriate into the payroll into their tax computation, leaving you with the responsibility of fishing out those individuals that have been added to the payroll, and and defending why they should be excluded. Now, those information, they get it from the immigration office. So the report will come very tiny, very, very tiny, that you need to use your mobile phone, something to enlarge it, to see these individuals. So I've seen such cases several times. So you have Americans, Canadians, Chinese going through this kind of challenge. Now, you will need to explain. And how do you explain this? You need to explain this using things like your employment contracts. Get the employment contract ready. You'll get they'll ask for probably pay slip, all those things that will confirm. But to some extent, what they're trying to do is for them they want to get some level of comfort that you are not hiding. They have this mindset that some foreigners earn dual income. They earn part of their income in Nigeria and part abroad. So that is the entire thing that's the entire understanding. So they will push you to a point where you have to justify. So you're ready to justify up to the bank statements. They might ask for your bank statement, which some of these employers will never want to give, which you too will not like to give, because if you disclose that, a lot of more things will come, like withholding tax that you did not even see you come up, a lot of things. So most times people don't want to disclose that. So, but try as much as possible to be very transparent. If you can manage a payroll system where you can share the bank account details where the payment was made from to the staff, to the foreign staff, it also be nice. But though deemed income is something that is not mystery, they will still subject it to the payroll tax table calculator. Does the 300, the first 300,000 at 7%, and the rest like that, graduated that way. Everything is the same. It's just that total amount might be different, and you need to defend it. So thank you. So that's all for me. In the absence of any other thing, I think we call it a day. But if you have any questions,
thank you very much, sir.
Yeah. Thank you. So thank you so much, Elizabeth. Thank you, Melum. Thank you, Victor, Lufemi, everyone. Thanks, Ibrahim, Nicholas. So for those that will attend the company Comtax tomorrow, feel free to send us a mail. I sure your hand is up. Do you still have a question? Your hand is up. If not, take it down. Then Rekia. We have Peachtree Sage 50 this afternoon. If you want to join as well, feel free to send us a mail. We'll add you there, or you give us a call. Thank you so much, and have a nice afternoon.
Thank you very much, everyone. God bless you.
Thank you. Thank you very much.
Yes.